Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a phenomenal day. We're taking a look here at ordinals, see what's going on here with this coin, what ORDI, effectively looking at some previous day closes to kind of establish new support levels. It's pretty obvious that the previous day close is current with this most recent high, and then we blasted through that 3 days ago. So you got to keep in mind, we are coming up on a 3 white soldiers type of pattern here. We want to pay attention to that. Typically it's followed by a 4th red day. Okay, so just keep that in mind. It's just a candlestick pattern. Not a definitive line in the sand, but something we want to pay attention to. Now, if you are new to the channel, just know I'm not a financial advisor and I love teaching people to trade. If you want to become part of our Trading Academy community or Signals group, link down below. Here's an example of some of our trades recently, 202%. This just last 24 hours. 26% EDU, that's a short. Bitcoin had an old long there. Bitcoin all take profit targets at 61%. That was from 37 to 42,000. XRP, Chainlink 61, VeChain 102, ADA 31, Cartesi 37, Dogecoin 38, Bitcoin 44, and the best one of all, Luna 2, 263%. So congratulations to our community members for that. Super happy it's working well for you. Thanks again for the wonderful feedback. I'm super happy to just be part of your lives as well. Thank you very much. So here's the thing with ordinals. We want to look at some fib levels here and kind of see what's going on. We'll do that on smaller time frames because there's a lot of intraday stuff we're looking at here. But generally speaking, at this point, we can establish that the price pulls back to 25.70. That should be a support level based on it being a previous week, or more so a previous day high. Actually, I didn't look at the weeklies. Yeah, it's previous week high as well. Okay, again, but you can see it easier on the daytime where the price action had about 3 or 4 days of being rejected off that first level. And we had this super large cup and handle pattern, okay? So that's kind of what we're looking at there. So that's really cool stuff. Let's go ahead and check out a few other key factors. Keep in mind, most things are going to be overextended, but it's kind of common and normal to see that happen. We're above all 4 moving averages, everything else on the daily time frame. We can kind of skip right over because we're converging on the MACD. We're over 70 on the RSI. None of that stuff really matters right now. That's the smaller stuff we want to look at. But the big picture, to me, seeing 3 strong green candles like this for upwards of 150% in 3 days, yeah, I think that's probably going to have to pull back soon. We'll talk about why. So 4-hour time frame here. Let's go ahead and quickly just note a few key factors. Of course, we're up over the all moving averages here. We're going to go ahead and draw out a trend line here as well, kind of give us perspective on just roughly where we're at right now. Kind of paying attention to that. A lot of times the 20-day SMA will work concurrently with that. So we could very well see that come up here and start to hang out with that trend line. Again, this just gives us perspective, but by no means if it crosses below, the sky's going to fall and the price is going to drop. But it's just something to be mindful of. Okay, trend lines just kind of help you understand generally where you're at, so you can kind of pay attention to certain levels. So one thing we can note here, what do you see that's pretty obvious? Significant amount of volume at this price point here at about 32.63. Okay, so that's going to be a key level too we want to pay attention to. We'll go ahead and mark that on the charts just to make sure we know later if the price pulls back, that's a strong likelihood of the price action bouncing there, or essentially consolidating before the next leg up or leg down. Okay. We take a look here at moving average convergence, divergence, still converging, no reason to be concerned. Money flow index and RSI extremely high. We can see on stochastics, however, it's coming down naturally, which is good. We could actually be looking for another leg up here soon. So there's no real reason to consider taking a short into this coin right now. I know it seems crazy. Everyone wants to just do that because it's really overextended, but it's not the right way to trade in most cases. You want to wait for confirmation. We take a look at TD sequential. Look how humorous this is. All the way up through 9, and it hasn't calmed down since. Keep in mind, this was a strong period of consolidation where all the volume is at. So the truth is that's a very strong support level, and that's essentially a reset. So we got they were just, the 5th previous candlestick was just slightly higher than the 4th. So to me, at this point, we're seeing 1, 2, 3, 4, 5, 6, 7. We're about 7 4-hour candles into this continuation. Most continuations last about 36 hours before a pullback, so we might have another 8 hours before the price yanks back. This may actually be the starting point. The hourly that was going to tell us a lot more though here, so let's go ahead and take a quick look at the hourly and kind of just see where we're at here. We're going to draw out some fib levels here, just get perspective on a smaller time frame, because this is more so what we're going to focus on. When you have such large movements, it's hard to see what's going on unless you kind of zoom in. Okay? Again, to me, the hourly has the best time frame for that specific situation. When coins go parabolic and you're trying to identify what the heck's going to happen next, this gives us better perspective. So again, if the price does pull back, the common retracement levels are 0.382, 0.5, 0.618. These are extremely common in nature. Trading pretty much everywhere you look, there's always these factors and numbers. 618, 0.618 specifically, is the most common retracement level. Coincidentally, you can kind of see here, we had some previous highs, 1, 2, 3, 4, 5, 6, roughly 6 candles wicked up to 0.618 at $44.40. That level is a likely candidate for the price action to pull back to. If we take a quick look at liquidity and fair value, we can see there's a significant fair value gap right at that level. So it makes sense for the price to wick down to 0.618 before the next leg up. Okay. Now, Elliott Wave does here tell us that if we are in our fifth wave here, basically, or sorry, it's more like our third wave, we have 3 higher highs and 2 higher lows. If this is the highest point that the price action will go, then we will see the price action pull back for an ABC pattern. It says A, B, C. 2 lower lows and a lower high. Okay. So just keep in mind, the probability of the price action coming down to that level is fairly high considering how this pattern has so far played out. Again, is there a guarantee? No, there's no guarantees in trading, but it's a statistical probability, okay? And again, right now, if we look at the the last 3 days have been super strong, super green. Go ahead and look it up yourself, search for it, 3 white soldiers. It's a very common trading pattern that often will result in a 4th red day. Now, keep in mind that 4th red day could just be a doji candle and it keeps going up. But traditionally, you're going to see 72 hours of continuation. At that point, the likelihood of the price pulling back, at least if it hasn't had any consolidation at all, is very high. The only thing I'm concerned with here is that this consolidation period is pretty good. In other words, that's a level in which the price pulled back, hung out there for, about 12 hours straight, and then it took off again. So that, in combination with all this volume, is a recipe for disaster if you're trying to short this coin. So please just if you're going to use high leverage, low position size, if you're going to use low leverage, still consider low position size so you don't get wrecked, and you never know what's going to happen with these coins. So again, my friendly advice is just to avoid this with a 10-foot pole, but if you're going to insist, I would say slightly larger statistical probability the price is going to pull back if the volume starts to taper off. Okay? Comes with a caveat there, huh? There's no guarantees, folks. I'm sorry if this was not definitive in what you're looking for, but that's just trading, and sometimes you got to accept the fact that a trade doesn't look very good. And to me, this is not a position to want to trade. Again, slightly higher probability of the price pulling back, but that's about all I got for you. Before I go, or before you go, please do me a favor, hit the like button, do yourself a favor, and join the best exchange possible. I'm only talking about this because they allow no KYC, no VPN. It's a phenomenal exchange, extremely beneficial, and there's so many other exchanges right now getting full KYC. I think BingX just went over the weekend with a VPN requirement. That's basically the starting point of KYC eventually. It's just the stepping stones. I've been affiliated with 5 exchanges in the last 2.5, 3 years. And in that time, every single one of them that required a VPN eventually required KYC. All right, just some friendly advice. Use this link for healthy benefit rewards if you are new to the exchange. I hope you all have a great rest of the day, though. We'll see you on the next one. Take care.